Hello, hi, my name is Olamide Olayemi. Welcome to another trading session um, on this platform. All I do is give signal on a daily basis and also explain why those signals are okay or should be taken. All right, so and then I also ensure that how I get those signals or I come to the derivation of those derived that you understand them. So and then this comes by you taking some little training and then getting to know some few things. So it's not as if those signals were sourced from another signal company or maybe it was gotten from any other person. No, it's just our own understanding, my personal understanding of the market, and then that's what I share with people. All right, so tonight we've checked the platform. Don't forget we only trade forex here, which is a currency pairs. So we do not trade the cryptocurrency for now. All right, so we've checked the market and then we are unable to come to a conclusion of getting a good trade. Instead of that, we have concluded that today seems not to be stable in the market, and then we are unable to get a perfect pattern and also a combination of technical analytics and then the fundamental analytics to give us an entry point for any of the currency. But notwithstanding, we're going to quickly take a short training so on the pattern, why it's important, and then the benefit of it. So tonight we'll be discussing about the candlestick pattern and then one of the pattern, which is the engulfing bar, engulfing candlestick bar. So it's very important. If you can know it and then identify it, it will help you to have a, a definite entry position whenever you want to enter the market, whenever you spot it. All right, so just as we used to do, we'll need to take our disclaimer. So let's just quickly run through it. So this material is provided as a general marketing and training communication for information purposes only and does not constitute an independent investment research. All information provided is gathered from reputable sources, and any information containing an indication of past performances is not a guarantee of future performances. Viewers acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high risk for which the viewer are solely responsible and liable. We assume no liability for any loss arising from any such risk. Warning: trading forex may not be suitable for all investors as they carry a high degree of risk to your capital. Alright, so let's go into the topic for just a few minutes and then we'll be done. Alright, engulfing pattern. So what do we mean by engulfing or engulfment? So I will explain this in a simple way. There's no need to use big grammar for it. What we're after in forex is understanding and then catching the entry point and exit point. Okay, so engulfing is just it can be explained as when you have two things and then one of them has overshadowed the other one, totally overshadowed. So we can say that is the A has engulfed B or B has engulfed A. So it's just like a father and then a baby. So the height of a father and then the baby, you can say the father has totally engulfed the baby. So that's another example of what we call engulfment. So, and it can be both sides. It can be a bullish engulfment and it can also be a bearish engulfment. If the price is moving up, if the buyers are in charge of the market, we call it a bullish engulfment. And if the sellers are in charge of the market, which is the price of of commodity or an asset is dropping, then we say it's a bearish engulfment. You can get more of all this training in my training packs, so it's much more explained. All right, so apart from that, so engulfment is in two. So if you look at these two different image sections, so the one at the left hand side, you see a red candlestick. This is a candlestick, and then you see a green candlestick. We are using the red as the bearish candlestick and then the green as the bullish candlestick. So here we can say the bullish candlestick has totally engulfed the red, so which means that the buyers are in charge of the market right now. So that's the explanation or the conclusion we come to. Likewise, in this market, you can see the green, and which is the bull, and then the red, which is the bear. So you can say the bear has totally engulfed the bull. So in this way, it means that the price of the market is dropping, and then we are forecasting that it's likely going to continue to drop in price. So you can see, so then your next trade, your action should be, okay, I'm buying here, and then here should be I'm selling at this position. So those are the simple understanding of a bullish and then a bearish engulfment. So when you see such in the market. All right, so let me now explain some other part of it. So in a candlestick has more than just the body. It has the wick, and then you can call the tail or so. So this place is the opening point of that day, of that time frame, and then this is the closing. So, and this is because it is red, is a bearish candlestick, and also this is a bullish candlestick. This is the wick, this is the closing for the day, and this is the opening. So here now, this gap lower, so you can see the difference between this place and this place is why we say it engulfed this. The green engulfed this at the bottom, and at the top, to between this place and this place, totally engulfed. So we will now say the bullish candle opened at or lower than the previous candle closes. So you can see that it opened at a lower price than the previous candlestick closing, while here you can see the bullish candlestick closes above previous candle open. So this candlestick closed above the opening of the previous candlestick. So with this, you say the length of the bullish candle engulfs the previous red candle. So we just come to a conclusion. So this is how you know. Then your next point of action will be to look for a suitable time to enter the market with a buy trade. Yeah, I will also say something, which is using pattern, the candlestick pattern is not enough. Is not enough validation for you to take a order or to take an order in the market. It's just giving you the starting point. So when you see such, you can now checkmate it or double confirm this with another technical analytic to just or an indicator. You need to confirm with an indicator like, let's say, RSI. You can confirm with, let's say, if you know how to use the Bollinger Bands, you can also use the MFI, and then you can use different ones. There's a lot of them that you can use. So once you are able to confirm your pattern with, let's say, one or two indicators, then both of them are telling you, okay, you can go in, it's a sure bet for that day. But the truth is, things can still change in the market, but you'll be sure that you didn't just assume. You really analyze the market, and then you took your shot. So with the hope, with a higher percentage of success and profit in the market for the day. So these are part of the things you do. So I will say it once more: do not enter the market based on the candlestick patterns alone. You must ensure that you double check it with an indicator or some indicators. But I will also say using more than two indicators to checkmate your candlestick pattern might at the end of the day bring about a lot of confusion. So it's much more better you decide on the indicators you are using and stick to those ones, and then the day they give you a yes, you go for it. The day they give you a no, then you abstain from the market. So it's much more better than testing different indicators every now and then, because each one might end up giving not tallying with another indicator. So it's good that you don't use too much of it, and it's also good that you do not use just the candlestick pattern to take a trade. All right, so why some people, when they use the candlestick pattern, another style that they use is, once you see the wick, you can target the wick of the bullish candlestick as your entry point, and you can also now use the tail of that same bullish candlestick as your stop loss. So with this, you can be rest assured that okay, you are taking a good trade, both whether it's a bullish system or a bullish market, or a bearish one. So both of them can be of advantage to you. All right, then in few minutes, let me just quickly show you some, let's say, engulfing bars in real life. Okay, this is a real life account, so I'm going to look for engulfing bars and then the result of it. All right, so let's try to see if we can get anyone. All right, okay, this is a bearish engulfment. If you look at this, okay, I saw one just now. I saw one. Okay, this is a bullish engulfment. You can see that this blue totally engulfed this red, so this is a bullish engulfment. You can see, so if you take a buy trade there, you can see that the price came up the next day. This on the 24 hours time frame, so you can see that the price came up and also it went higher up. It came there a little bit and then it went higher. So you can say if you had entered the trade as of this price, which is 1.1918 and 1.1918, you see that you would have been able to get to about to this point, which is 1.1976. So that's about 581 points, which is about 58 pips. So you would have been able to get up to 58 pips within 1, 2, 3, 4 days. Within 4 days, you'll be able to get about 58 pips profit to you. You understand? So that's one. So let's look at another one. Let's look at another engulfment. Okay. So as I've earlier said, it's not too good to just use the pattern alone. Okay, like this that I use as an example. If you take a closer look at it, below I have RSI. You understand? I have RSI as a checkmate indicator, and you can see the RSI is below. This is below 20, so it's already getting to it's already at the oversold level. So you can see, and then if I taking a trade here, you can see it came up. So I can use this to checkmate my positioning before entering. So okay, let's look at another one before we call it a day. All right, so okay, so what you just need to do is wait until you see a pattern. So it's not good for you to just try to force yourself to take the trade. So it's not too good. You need to ensure you take your time. All right, so this is another one. We have this. Where is it? I'm trying to zoom in so that we can all see it. Okay, let me check this. So this you can see this candlestick, and this you can see that this, okay, yeah, this is not an engulfment. This is not an engulfment, so we can't use that. All right, let's search for anyone in this is Euro USD. We're trying to, okay, there is one. This is a bullish engulfment, and then this is a bearish one. You can see this bearish candlestick totally engulf the body of this bullish candlestick. So as long as it totally engulfed it. So if we now look at what happened, if I take a sell trade as of this point, or as of this point, if I take it as of this point, you can see day one that I entered, day two, you can see between 2 days of entry, it dropped. If I taken the trade around this position in the next day, you can see this place, it dropped about 130 pips. So that's a lot of profit within 2 days, you can see. So what did I use to validate this? Engulfment. So I was certain about this engulfment, so that is going to drop. So that's how it can either be a bullish engulfment, or it can be a bearish engulfing bar. Either of the two works. Also, another thing you must also do is ensure that you know the trend of the market. Okay, if you look at this right now, the Euro USD in a long time frame, let's say daily or weekly or so, it's a ranging market. You can see it's a ranging market. You can see it's always going back to this place and coming back to the same spot. So but when you zoom in, you can take it as a upward, a downward trend, upward trend, downward trend. You can see. So if you had already got into this, place and it's rising, so then you can say, okay, this is an upward trend, and then you only stick to entry trades that are which is, or you look for bullish engulfing opportunities. So but if it's at the top here, and then it's coming down to this spot, so then you look for bearish engulfing opportunity, which an example is this. Oh, I'll skip that. So I guess I saw one good example there. All right, I couldn't see it again when I zoomed in, but if you look at this spot, if you look at this blue candlestick and then the red candlestick, this is it engulfed it, and then this is a time to take a sell trade, and you see what happened, the trade came down. So depending on what you are using to checkmate your decision, so it's possible that you can have a lot of engulfing patterns giving you a lot of profitable entries, but at the end of the day, you might also have, or sometimes you might also have some that you will enter and then the market can change. So it depends on the number of wins to the number of losses. So just ensure that you are calm, and then there is no issue. All right, so that will be all for tonight. It's just an hint, or just to give you a summary of what the candlestick pattern can, how profitable it is, and then how you can use it to your own advantage. All right, so I will also tell you that if you're trading, ensure to trade with a trailing stop system, because it's much more good, and then it can save you money in the nearest future. So all right, thank you, and then have a lovely day. So trade well, trade safe, and then don't blow your capital. Good night.